Hey everybody, this is John, and welcome to the free video. So tomorrow we of course have quadruple witching expiration, and we in the premium video went through and kind of talked about some of the positions that we have for that, Facebook, etc., and also the SPX. But what I want to talk about in the free video is what happens after quadruple witching. And so, typically. Well, there's different things that can happen. Either, we've got stocks and markets that are setting up for massive expansion. Okay, one way or the other, they're going to have a forcible move to the upside, or they're going to have a forcible move to the downside. Or you're going to have things like the transportation sector that have been kind of trading sideways, and they're gearing up. And the question is, all right, are they ready to go higher now, or are they ready to revert back to the mean? All right, so let's take a look at that in more detail. Okay, so one of the biggest things that we want to look at after quadruple witching is which of these extended markets are consolidating their gains, okay, and getting ready for their next leg higher, versus which one of these have reached the point where algorithmic trading systems, are actively starting to short the market, in this case, for a move back to the mean. Now, essentially, if you see these green arrows, it just means that they're gunning for a move back to this level. If you see pink levels, which we don't here, it means that they'd be gunning for 175. Okay, so for transports, i.e. IYT, I'm just looking for a modest pullback from 186.54 back to 182.35-ish, and that could be an area where we could go long again, but mainly here looking at selling call credit spreads or buying puts on anything transportation related. Now, what's interesting, so you saw that the transportation sector is gearing up for a move back to the little mean. Okay, you can see that UNP, which is one of the largest stocks in the transportation sector, is gearing up for both a reversion back to 124.77. Okay, that's a healthy move from there, and back down to 115.35. All right, so this is important to keep in mind, that a lot of these high flyers are actually getting algorithmic triggers that is telling them it's time to start taking positions for reversions back to the little mean and the big mean. Okay, and it becomes a self-fulfilling prophecy. So remember this one. This is not one that if you're looking at it going like, boy, I want to get me some of that, and for the next leg higher. No, this next move is lower, and you want to be positioned for that. In addition to those reversion trades, and again, we're looking for little means and big means, we're also looking for things that are building up with what I call kind of these are those needle in a haystack power moves, where you get at least 5 of these time frames lined up like this. In this case, you got the 60-minute, 2-hour, 4-hour daily chart in 2-day squeeze. All right, and you can see when these were all shaping up here, PRA was consolidating around $81.50. Okay, now this was from last Thursday. So now here we are a week later, and you can see that PRA has gone in a week from about 81.50 to 89.13. Just an incredible power move. So these are expansion moves. Now note where it ended up. Okay, this is something that I'm going to talk more about on the Saturday class, because this is actually an expansion move target, but then something completely different happens once we get up to the target. All right, so what is this and what am I talking about? If you go to simplertrading.com/ETF, you'll see that there's a countdown. The class is going to be starting this coming Saturday, and the strategy portion of the class, I'm going to start trading at 12 noon. So what does that mean? All right, but this is a little scrunched, but I'll kind of give you the quick lowdown here so you can kind of choose your journey. So we're setting these up. This is still the early bird pricing, which is good till Saturday at noon. And for the pro version of the class, you're going to get a copy of our ETF course, so you can learn all there is to know about ETFs. So when we get to the sector rotation part of Saturday, you'll be up to speed. And then for newer people, there's going to be an options basic course that's from 10 a.m. to 12 noon Central. Then the real meat of the class is going to start at noon, and we're going to talk about the multi-squeeze indicator session. That was the one that you just saw on PRA, okay, where you see those 5 squeezes in a row like that, and that's what we're looking for. And so we've got a tool that can do that quickly and easily, saving you a lot of time. Okay, and then of course that also includes a free copy of the indicator itself. For the elite version, what that is everything I just described, okay, plus 3 days of live trading, plus when I was talking about the big mean and little mean, those little hats there, you're going to get a copy of that indicator as well as the strategy to use behind that. Okay, there's a master version too if you're interested in it. I'll talk more about that on Saturday, but it also gets into correlations. But I would say if you're looking at this going like, wow, that was cool, I'd pick one of these so you can at least get the tools and get to work on this, because this is I'm changing my trading plan for 2018 to adapt to these methodologies, i.e. violent reversion to the mean and violent expansion, and these are the tools that I'm going to be using. So I want to show you essentially my trading plan for 2018, how to use all these tools, and you get copies of the tools, and we're going to go through and have our checklists and everything like that, and it's going to be a lot of fun. The savings right now are substantial during the early bird pricing. You save $2,100 with this, $5,400 with this one. This meaning that our typically 3 days of live mentoring online is quite a bit. So we're able to kind of do this in a more leveraged way here, so you can kind of get that benefit of looking over my shoulder while I'm trading and ask me questions and different things like that too. So it'll be a lot of fun. One of the main questions that I always get for these classes, for folks that have either hadn't done a class before or they've done a lot of classes, is like, okay, well, how is this different from the tools that I have? Well, the main thing with this is that the markets are continually changing, and the reason for this is that hedge funds are always looking for an edge. They're always writing new and updated computer programs to take advantages of nuances in the markets. That's what's happening here. That top hat indicator and the multi-squeeze capitalize on this and take advantage of it. Okay, so this way you're now able to kind of flow with the markets instead of kind of getting run over. It's like, wow, why did NVIDIA crash out of the blue? Well, guess what? That was kind of a planned algorithmic trade. Now we know where they're doing it and why and when they're doing it, so we can actually participate in it instead of getting run over by it, which is a lot more fun. And this also works on Bitcoin futures, which is great. So again, anyway, this will be a lot of fun. Simplertrading.com/ETF, and looking forward to seeing you there.